About 90 days ago, I shared that I was in a drawdown on my trading account. This was a really challenging time for me. I didn't know if I was going to blow the account entirely or if I was going to be able to recover. So I spent a lot of time reviewing my trades, reviewing all I had learned, and I decided to stick to a strategy that was simple for me to understand and I could repeat every single day. And luckily, at this time, this strategy has pulled me out of the drawdown I was in, and I am now profitable. And I want to share this with you. In order to effectively trade this strategy, there are 2 rules that you must follow. Rule number 1, if we are outside the previous day's candles range, you want to look for how price reacts around the previous day's high or previous day's low. And the setup you'll be looking for would most likely happen within the first 30 minutes of the New York market open. Rule number 2, if we are inside the previous day's candles range, you want to wait for the market to pick a direction, and this will most likely happen after 10 a.m. Eastern Time. Just save yourself from chop. So first things first, before we begin, this is my account summary from April 30th, 2025 to July 11, 2025. As you can see here, the account grew by 74.24% within that time. Alright, so this strategy revolves around the previous day's high and low candle. So first thing you want to do is to just mark out your previous day's high and previous day's low on the daily time frame. The reason we care about the previous day's high and previous day's low is because when price is above the previous day's high, there's a chance that we'll see continuation towards the upside. And when it's below the previous day's low, there's a chance we'll see continuation towards the downside. So for this strategy, there are 2 scenarios. I'm going to go through scenario A and scenario B. And within scenario A and scenario B, there's certain criteria that you have to look for. So stick around. So we're going to be starting with the first scenario that you really do not want to trade, because this scenario saves you capital. It's when the price is trading inside the previous day's range and we are yet to pick a direction. What that looks like is that you would notice that price is between previous day's high and previous day's low, and also in between pre-market high and pre-market low. In that instance, you either want to size down, reduce the size you're trading that day, or just skip it in general and preserve your capital. Just because we're stuck within this range within the first 15 minutes to 30 minutes does not mean that that's the trend for the day. If you're patient enough, like I said, and you have time on your hands, you could sit and wait for one of 2 things to happen. Eventually, we could either break pre-market low and then break the previous day's low. And then what you want to do is to wait for the retest of the previous day's low to take a trade. When we see wick action coming into the previous day's low and we then see confirmation failure below this candle right here, we can enter this trade right here, and then your stop loss will be placed right here. You can target low of day and the next level that you have on your charts. The idea, like I said in the beginning, is when we break the previous day's low, there's a high chance we'll see continuation to the downside. This is not going to happen all the time, but there's a high chance. And if you manage your risk well, you'll be profitable trading this. Another thing that could happen is while we're chopping in range, we hold the pre-market low and we don't break through the previous day's low, right? And then we see that price continues to push higher, and then we break out and we're able to retest this previous day's low. We want to enter the trade once we see confirmation that buyers stepped in, and then we enter the trade here, risking this as your stop, and then you want to see continuation towards the upside. And the next scenario I'm going to be talking about is my favorite one, when price is trading outside the previous day's range. We saw this type of action in the last 2 weeks of June into like the first week of July here, where like we're seeing a lot of gaps, a lot of continuation towards the upside in the market. And that's when, if you're disciplined and you waited, you would be able to capitalize on a lot of opportunities and you'll be able to grow your account. So in this case, the previous day's candle, you can see the previous day's candle right here. And what happens is that in pre-market, you can see that prices is just like building, and then we see this strong push up once the market opens. And what we're looking for is a retest of this previous day's high level. And once we get confirmation that buyers are stepping in and holding price above the previous day's high, we want to then enter on confirmation and look for a trade towards the upside, continuation towards the upside. This is a high probability setup that works in trending markets. It has like an 80% win rate. You should backtest it. And then within this scenario B, you have the opposite direction as well. When price breaks below the previous day's low, same scenario, right? We break pre-market low, we break previous day's low coming into the market open. And then what we want to look for is a retest of this previous day's low level. See that sellers are taking over and buyers are weak. And then we enter the trade, right? And then we risk a reclaim of this previous day's low level. These setups are easy to trade and not complicated. It just takes patience to wait for them. That's the key. If once you understand how to look for it, what you're looking for, it just takes patience to execute it and compound your account. So that's the strategy. All you have to do now is just follow the rules. It's that simple. So let me know in the comments if you have any questions. If you've tried out this strategy before, what do you think? If you're curious about it, you can reach out to me on social media. I will do my best to respond. I'm going to continue to make videos like this to share my progress and any mistakes I'm making, the successes, so you can learn from it. Thank you so much for watching. I will see you on the next one. Make sure you're subscribed and you turn on the notifications so you don't miss the video.